The first day on which those who are in silver contracts and are short may give notice that they intend to deliver silver. And they'll only do that if they've got the silver to deliver. If they don't have it, they'll wait for a future date, and they can wait all the way through to the end of March to give notice that they'll deliver silver. When they give notice today, they'll deliver the silver on the next working day, which will be Monday, the 2nd of March. How many ounces of silver have been notified for delivery so far? Well, the answer is, if we look here on this sheet, the answer is 22,700,000. And how many, what's the remaining open interest? Well, as of Thursday evening, the remaining open interest is 31 million ounces, of which it looks like 22 million have been already announced for delivery. So that would leave another 9 million to be announced for delivery.
On the first notice day for silver futures contracts, short holders with physical metal can officially declare their intent to deliver. As highlighted in recent market commentary, 22,700 silver contracts, equivalent to roughly 22 million ounces, have already been announced for delivery. With remaining open interest at 31,000 contracts, approximately 9 million ounces are still pending notification before the end of March. Market analysts like Clive Thompson note that delivery data often signals real supply conditions in commodities trading. Silver contract notifications remain a key indicator for investors tracking physical demand and futures market dynamics. Now, we present the clips from Clive Thompson's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Thursday evening, the remaining open interest is 31 million ounces, of which it looks like 22 million have been already announced for delivery. So that would leave another 9 million to be announced for delivery. If that's all there is in terms of deliveries, it's actually well below the 80 million which was delivered a year ago. But that figure isn't necessarily the total of this one, the March open interest, minus the 22,700, or it's not necessarily as low as the 31 million you see here. It could well be that during the month of March, some people who want delivery of silver actually buy silver futures and then expect delivery before the end of the month. That's entirely possible. Now, what's been happening to the silver price over the last week or so? Back a week ago on Wednesday, it was at $77. It's been climbing more or less every day, not every day, but more or less every day since then. And it's now, it was this morning at $90. And now you can see on the screen, which we looked at a second ago, that it was at $92.40, still moving up a little bit. So 77 to 92, well, that's $15 higher, which is about 18% higher on in a week, 10 days maybe. Let's now just look at this page, which shows us the amount of silver being delivered. You can see that in January and in February 2026 here, the amount of silver delivered was higher than January and February 2025 or January, February 2024. The amount of silver delivered in 2026 appears very low compared with, this is for the month of March, compared with last year. But we're only a couple of days into it, so that figure will go up in the future. But whether it will reach 16,000 contracts, which is equivalent to 80 million ounces, is doubtful. We shall see. The squeeze which we expected on the silver has only happened to the extent of about 15% in 10 days. I think a lot of people were expecting more, but the rising silver prices encouraged shorts and longs to exit the market. And we'll have a look at what went on shortly with COMEX. So here's an article from the Financial Times. I'll just read a bit of it. It says, the CME Group halted trading on its flagship metals market for an hour and a half on Wednesday in the latest outage for the world's biggest derivatives exchange. The Chicago-based operator resumed trading at 1:45 local time after it was stopped at 12:15. Now we'll see what social media has got to say about it, other things, but here's another announcement from the CME. It's from investing.com about the CME outage. CME Group announced on Wednesday that trading in its CME Globex metals and natural gas futures and options had been halted due to technical issues. The exchange operator stated its support team is investigating the matter. The exchange operator said all day orders and and good till date orders for Wednesday would be cancelled. Good till cancelled orders had already been acknowledged and would remain working. Now we'll look at a bit more information on this. The CME announced that all orders placed for the day, as well as good for the day orders marked with the current date, would be cancelled entirely, with only confirmed good till cancelled orders remaining valid. So we had a day when unexpectedly orders which people had put in were just cancelled. Nikki Shields, head of metals strategy at MKS PAMP SA, stated that experiencing a freeze just before market close was extremely poor timing, and noted that all participants using futures for pricing and hedging purposes were affected. Well, that's definitely true, because a lot of people would have been wanting to deal in the futures, either to go long or short or open or close their positions, especially just before the first intention date, which was yesterday, Thursday. And if they had their orders cancelled, they would have perhaps missed the market. So here we have the times. It's not very important to look through the times, but it tells us the times of the opening, closing, and shutdown of the market. But looking at the X, I find some interesting posts. This one's just typical of many, and this is just allegations. It's not necessarily true, but this is what people are writing and thinking. They say, the COMEX exchange is helping trapped shorts. CME Globex platform suffered a sudden technical issue, specifically halted trading in metals and natural gas for roughly 40 minutes. During this freeze, the CME aggressively cancelled day orders. Was it done on purpose to save the trapped banks? Proving a deliberate plug pull in a court of law is nearly impossible, as the CME will always hide behind the shield of system architecture failure.
Silver futures markets have entered a critical phase as March delivery data and price volatility capture investor attention. Open interest stands near 31 million ounces, with 22 million already announced for delivery, leaving roughly 9 million pending. While last year's March deliveries reached 80 million ounces, current figures remain lower, though early in the cycle. Prices surged from $77 to over $92 in just 10 days, an 18% jump signaling tightening sentiment. Meanwhile, a trading halt at CME Group disrupted metals futures, canceling day orders and fueling speculation about market stability and short position pressure within COMEX. Let's get back to the interview.
We're going to look at the gold and silver prices now. Gold at the moment is trading at $5,233, which is up $49, or up 0.95%. Silver is at $92.21. Earlier today, it was below $90 at about 89 something. So it's $92.17, up 3.85%. 4.5%, beg your pardon. The platinum price is also up today nicely. It's at $2,351, up $89 or 3.97%. And palladium is at $1,776, up $8 or 0.47%. In Shanghai, the silver price is trading significantly above the New York price. The Shanghai price, as you can see on this chart, is 105.76. That compares with a New York price at the moment of $92.35. So it's very roughly $12 or $13 higher than New York. That's a nice premium and an unusually high premium for Shanghai silver compared with New York silver. Needless to say, the exchange-traded funds which track gold mining shares and silver mining shares are up on the back of the rising gold and silver price. So just to recap those prices, gold is at 5235, silver at $92.36, platinum at 2,354, and palladium at 1,778, all of them up today. Now let's have a look. We've been counting down to today's date, which is the first notice day. That's the first day on which those who are in silver contracts and are short may give notice that they intend to deliver silver. And they'll only do that if they've got the silver to deliver. If they don't have it, they'll wait for a future date, and they can wait all the way through to the end of March to give notice that they'll deliver silver. But when they give notice today, they'll deliver the silver on the next working day, which will be Monday, the 2nd of March. So how many ounces of silver have been notified for delivery so far? Well, the answer is, if we look here on this sheet, the answer is 22,700,000.
Gold and silver prices are surging on first notice day, signaling intensified demand across global metals markets. Gold trades at $5,235, up nearly 1%, while silver jumps to $92.36, gaining over 4% in a single session. Platinum and palladium also post strong advances. Notably, Yun silver on the Shanghai Futures Exchange is priced near $105.76, about $13 above New York futures on COMEX, reflecting a significant premium. Mining ETFs are rallying alongside bullion, reinforcing bullish momentum. Investors are closely watching delivery data and cross-market spreads for signals of tightening physical supply and sustained upside potential. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.